Well, good afternoon, good morning. We have people registered to attend this webinar from throughout the globe. So everybody from Asia right the way through to the West Coast of the United States is dialing in. We're going to give it a couple of minutes so that the attendees who are, as I speak, spooling in, have time to do so. I'll probably start in about 30 seconds to 1 minute. Okay, I think people are still joining, but the bulk of you are here. Again, good morning and good afternoon to everybody. I'm delighted to be joined today by David Bennett, ETOA's own tax advisor. What I wanted to do is just give a quick summary of the situation concerning German VAT in 2023 to those who are unfamiliar with it, and then just an update on what the current situation is. The German tax authorities, for what it's worth, gave a written answer to a number of questions posed in the Bundestag about 2 weeks ago. We haven't actually seen the written answer, we're not allowed to, but we understand the contents of them, and they'll be covered as we go through today's webinar. What I'll do just to start off with is do a quick rundown. It'll probably take about 10 minutes or so of the current situation as far as we understand it. And it's very much addressed to people who are unfamiliar with the situation. So those who are familiar with the situation, well, you can either relax or do some revision while I go through it. Excuse me while I share the screen so we can do the presentation. Right. Okay. You should see the screen. David, can you just verify that the Tom screen is visible?
Yes, it is.
Good. Right. Okay. The tour operators margin scheme, as you probably know, is what's known as a simplification of normal VAT rules. It means that an operator applying the tour operators margin scheme pays the VAT incurred on services, and it leaves them unreclaimed in the destination. And all they're expected to do is account for the VAT on their margin between their costs and what they charge the consumer, their margin in the EU member state where they're established. The great virtue of this is it avoids needing to register and account for VAT in each member state where business is conducted. It has the great virtue also of leaving tax unmessed with in destination, and it taxes the adding value of margin where the sale takes place. Non-EU operators, and ETOA historically has mainly been interested in non-EU operators selling Europe to worldwide origin markets. They paid tax on the components like any EU operator, but they did not pay tax on the margin, and it's their gross margin, obviously, that includes all their expenses on the margin which is incurred in their market, in the origin market where they're based. So effectively, they paid input tax in destination, but they weren't subject to any other sales tax impositions. The German announcement on the 29th of January 2021 was that TOMs will not apply to third countries, i.e. non-EU operators. And that meant, consequently, that non-EU operators would have to register, reclaim input tax and charge output tax on German services. They're effectively applying a sales tax to the sales made of German product globally. The implementation was deferred until the 1st of January 2022, and it was being deferred again to the 1st of January 2023. And the tax office has made it clear, and it made it clear in the letter to the Bundestag, that they're determined to have no further delay. How practical that is, we will discuss that in a minute. The implication of this is that all non-EU intermediaries who sell German products must register with the German tax authorities. And that means all people selling in principle in the UK, US, Canada, Mexico, Japan, Korea, China, everywhere. And the company who buys directly from the German supplier will reclaim input tax, and the company who sells to a consumer must apply German VAT when selling to that consumer. The bit in between I will cover in a minute, but it's subject to a degree of disagreement, I think, should we say, amongst the analysts. The compliance burden is really quite considerable. It's not just the money. There is, at the moment, no de minimis level. Even a single supply of one FIT night would involve liability for the person making that sale to register with the German tax authorities. And it also impacts any tour that enters Germany. So it's not just entirely German product. It's if you've got a comprehensive European tour that spends most of the time in UK, France, Belgium, Italy, Switzerland. If it goes through or involves any services in Germany, you will have to start complying to this new regulation. Tax returns at the moment have to be filled monthly, even if no business takes place. And the rate of tax is determined proportionally by the rates applied to the components. This is not uncomplicated. Accommodation, catering, cultural attractions, river cruises, tour guides, transportation have different rates. And so you will have to make a calculation based on the proportion of your product which attracts these different rates, and you will then have to proportionally output tax accordingly. Is that a reasonable summary, David? I appreciate I'm not a specialist in this area, you are, but is that reasonable?
Yes, I think so. One of the points we will be coming on to, of course, is that a lot of what we're discussing here is uncertain. We are basing what we think is likely to happen on German practices in related areas over quite long periods. So we're fairly confident, for example, that the point there about applying tax proportionally based on the rates applied to the individual components will be correct. But I'm pretty confident in saying that the German tax authorities have not actually confirmed that.
Right. As David says, we'll cover in a minute the state of our ignorance about this, but we'll hold tight, we'll get there. There is a cost burden. The cost impact is very difficult to determine, as David's alluded to, because it's contingent on what proportion of your product consists of components and margin. There is a big competitive difference between operators buying directly from suppliers, and they can reclaim the tax they've paid in Germany or on this German product. And if you're buying through an EU intermediary, if you buy through an EU intermediary, an EU B2B wholesaler, they have to account for tax according to the tour operator's margin scheme. And that gives no scope for reclaiming your input tax. But you have to pay the output tax on the product presented to you by this EU supplier. So this double tax, I think, looks like it's going to render not just German wholesalers, but any EU wholesaler selling German product uncompetitive. They have to impose a double taxation according to these rules. There are a whole set of things, as David said, that is just unclear. We don't know where people register. It looks like they're going to have to register with the tax authority, which is responsible for the country in which they're situated. And there are different tax authorities according to the country in which you're situated. There is a different one, for instance, if you're based in the UK, and there is a different one if you're based in the US. We don't know if businesses have to file monthly, even if no business takes place. This is the convention in Germany at the moment. We understand that they're thinking of applying this, but we're not certain. If it does, it means there's a huge administrative liability for somebody selling an individual FIT package. We don't know if there's going to be a de minimis level. I'll cover that a little bit later, but at the moment, there is no de minimis level. Even if you're a single agent in Guangdong province selling one night in one hotel on one occasion, you may find yourself locked into a cycle where you still have to file tax returns, even though no business is taking place. Does every part of the supply chain have to file, or just those buying from Germany and selling to consumers? Is the intermediary chain excluded? As David alluded to, we don't know. If previous protocols are followed, it's just the company that is buying from Germany. They have to, they are entitled and indeed are expected to reclaim the input tax. It's a very moot point whether they have to file an output tax calculation, because up until now, the final responsibility lies with the person selling to the final consumer to pay that tax. So there's a possibility that there will be products circulating, which is German product, net of VAT. I'm sorry, we have a temporary fire alarm. This will disappear in a second.
I'll just jump in then for a moment.
It's over then. But do jump in. That was
okay.
I mean,
just on this point. So, what is the status of an intermediary? So, not the purchaser of the services in Germany and not the final B2C supplier. I've been told that technically, such intermediaries will have a responsibility, a requirement to register for VAT in Germany. They will be, in effect, making services subject to the reverse charge. Now, I have heard the contrary view to that, so I think this plays to the general uncertainty of this position. But certainly, I think the standard German approach is that everybody in the chain is likely to have an obligation to register. That has certainly been the way in theory that the reverse charge has been applied in Germany in the past, as I understand it. Back to you, Tom.
Okay. But do you mean by that, David, that they have to register, but do they have to, if they're not selling to a consumer, do they have to apply VAT, or do they just register with the German authorities telling them that they've conducted this they conducted this transaction?
Yeah, I mean, I think conceivably, if you're the intermediary in the middle of a chain, you're buying German services from a non-German business. If you buy from a German business, then no problem. But if you're buying from a non-German business, then I think technically the reverse charge applies. You then sell on to somebody who may have their own reverse charge declaration. So you would register. You would pay the appropriate German VAT on a reverse charge basis, but because your onward supply is taxable for German purposes, I think you'd be entitled to recover the input VAT. So it's a complete nonsense in many respects, but I think, so I've been told, is likely to be, theoretically at least, the requirement imposed on such an intermediary.
Right, okay. But do you think that, I mean, we may as well get this out. I mean, is there going to be a circumstance where a wholesale tour operator based outside the EU would reclaim their input tax and just pass that on to someone else on the basis that the person that they're passing it on to will, they will simply, it's their responsibility to pay the tax eventually to the German tax authorities? And will there be product net of VAT circulating?
Yes, I mean, this is not anything new as such. I think many people on the webinar will remember that Germany operated VAT refunds effectively for wholesalers not established in Germany, but who were buying German product. And this only stopped a couple of years ago, really. And I think what this is doing, amongst other things, subject perhaps to certain conditions, is reintroducing that. So let's say you were a US purchaser of German accommodation, which you intended to resell on a wholesale basis to a tour operator, perhaps elsewhere in the US. That first tour operator with an invoice from a German hotel would be entitled to recover the German VAT. Mean making a claim directly to the German authorities, but in principle, I think that VAT is recoverable. Because that company in the US is making a wholesale supply of German product to another business, then I think the invoice for that sale could be issued with no VAT, but the obligation to pay the VAT on that invoice would rest with the second American company. That's the reverse charge.
Mm.
So that company would then register in Germany, would declare the VAT on its purchase, and then raise its own sales invoice, which, depending on the circumstances, may well also have no German VAT. And then the next person in the chain registers, and so you go on. Conceivably on a totally unlimited basis. You know, this could go on into infinity. In reality, if you had 4 or 5 intermediaries doing that, then you've got 4 or 5 arguably completely unnecessarily compliance obligations placed on those businesses. It would make more sense, perhaps, if the first company recovers the input VAT and the final company pays the VAT on the eventual final transaction. But whether that will be the case, as we said just now, we've heard suggestions that that will be the case, but this is just one of the areas of uncertainty, I think, unfortunately.
The other, there's a list of unknowns here. The next question, is there any relief for EU wholesalers subject to double taxation, or from those buying from EU wholesalers? There is a real problem with double taxation here. It's usually something that people try to avoid, but it seems to be being embraced by the current proposals, and I can see no way around it. There's a further thing which I'm not alluding to here, but it's very obvious for anyone looking at it, is that if you're selling to a company for own use within the European Union, if you're outside the EU, you're in a position to issue VAT reclaimable invoices. So it means that a lot of MICE operators and business travel houses might find it very effective to base themselves outside the EU and sell to EU business customers. But that's in a slightly separate world from the one we're living in. By which I mean we're mainly of interest to leisure tourism here. The next question is, do the Germans have the bureaucratic capacity to cope with what they're doing? There are 31,000 travel agents in China, there are 10,000 in Japan, 80,000 in the USA, 12,000 in Mexico, probably about 4,000 or 5,000 in the UK. Now, not all of these by any means are going to be involved in this or caught by this problem. Most of them will be selling, if they sell Germany, will sell it on an agency basis, which means it's the responsibility of the tour operator in that mechanism. But I noticed that in America, over 20% of revenue of travel agents is not commission-based. So a significant part of the business of travel agents is buying product and adding their own margin to it. Now, even though only a small percentage of these people are going to be liable, all may be liable, and so we'll need to be aware of it. And also the Germans will have to be in a position to both explain and address the really quite formidable volume of inquiries and indeed obligations that are lying out there. Next question is, are people going to be able to file in their own language? They're going out to China, presumably, telling them that these new rules apply. Do they have to file these tax returns in German, or can they do it in Chinese? The next question, which is related to this, is there going to be any attempt to publicize what's happening in the origin markets? At the moment, the notice that this is happening is really very internally and really quite obscure within Germany. There's no broadcast that this is happening. This is a considerable liability on businesses globally to pay German tax, well, ostensibly that they have to do so, and yet no notice has formally been served, and no campaign alerting to people that this is happening has taken place. And they really do need to explain the complexities of the different level of taxes, reverse charge mechanisms, liabilities on deposit payments, and all these other issues, which need to be unpicked and unwound. And they really have to do so before they start expecting people to comply with it. The next question is this really going to be rolled out globally? Or is it going to be done on a market-by-market basis? And there's no provision to say you can do it on a market-by-market basis, but it's possible that they're going to try and do it on that on that level. It certainly would make a lot more sense to do it on that level than to do it as saying that the entire earth has to comply with it. Whether they're allowed to do that is another matter entirely. Next question is, and this is the first question I think any business would ask themselves, that I'm going to comply to this. Are my competitors going to comply to this? So the next question they're going to ask is, how is this going to be enforced? Are reciprocal enforcement measures in place? They are in some of the origin markets that are out there, but a lot of origin markets have no reciprocal enforcement measures in place. So the Germans' authority to enforce these measures will be fairly tenuous in some of these origin markets. We also don't know how they're going to follow transcontinental intermediation. It's a very long phrase, but it's perfectly possible that a hotel room will be sitting on a bed bank, will be contracted by a London wholesaler, and will then sit on a bed bank in Japan, and then sold to a Chinese wholesaler who will then sell it on to a Chinese agent. All of these at net rates with minimal levels of margin added to them. Now, the responsibility for looking after these transactions lie with different tax offices in Germany. And we just don't know how they're going to follow this line of tax liability. Allied to that, they say at the moment there is no de minimis level formally permitted. But in such circumstances where you're selling an individual hotel room at a net rate, maybe at a margin of as little as 1 or 2%, and we're then looking at maybe €2 per transaction, how are they? It's manifestly not worth their while to pursue that tax liability, particularly if it goes from London to Japan, and from Germany to London, London to Japan, Japan to Beijing, and Beijing to Guangdong province, all for the search of maybe 9% on a $2 margin. It makes no sense at all. So the question we're posing is that if they're saying there is no de minimis level, there may be a de facto de minimis level, if you don't mind a blizzard of Latin. We also don't know what penalties will be applied for non-compliance, and nor do we know how these penalties will be enforced. The other thing we don't know is if this is going to apply to everything sold after January the 1st, 2023, or to that which arrives in Germany after that date. I'm told at the moment they're thinking that it will apply to everything arriving in Germany after that date, but given they've given no formal notice that this is happening in the origin markets, it seems entirely unreasonable for them to do so. And so if that's the case, and it is unreasonable, will there be any relief applied to sales made before the end of 2022? Again, we simply don't know. Lastly, and you'll be pleased to know this is the last slide under the known unknown category, is it going to happen, or will it be postponed again? There is reform taking place at the EU level. The European Commission, the taxation unit, the indirect taxation part of the taxation unit is actively looking at reforming the tour operators margin scheme with specific reference to its functioning outside the European Union. If that takes place, all these efforts by Germany will be rendered obsolete. There is widespread ignorance of this scheme. So they're trying to implement something where the people whom you're trying to tax are completely unaware that this taxation is coming up, or a large proportion of them are. And when informed, when people aren't ignorant, there's widespread confusion, as we've just been outlining now. And there's no coherent modus operandi. They've got no, the German tax authorities informally have instructed us that they know that there's a lot of complications, but if they implement it, and they did say if they implement it on the 1st of January next year, they'll start sorting out all the complications there and then. This is not advice from somebody that appears to know what they're doing. What can we do? I would earnestly say that if you are a tour operator, you should be writing to your suppliers They need to let their local chambers of commerce know, their lander know, that if implemented, this starts to make Germany a seriously toxic destination. The compliance costs and the actual fiscal costs of this are really quite substantial. Do raise this with your local associations. I'm delighted to say that we're very active with US TOA, as we are with ASTA and with Cato in North America. And I think in some ways, North America represents a hope for postponing this, because it is genuinely unreasonable, this imposition on North American businesses. Let both the national and local tourist officers know the damage that this will do to the destination. One of the more, well, it would be laughable were it not so serious, one of the more extraordinary statements made by the German tax authorities in their submission to the Bundestag was that they felt that there was absolutely no likelihood of any diminution in demand of this process, because they said Germany is a wonderful destination, which is its attractiveness will make any resistant to any downside to this implementation. I don't question that Germany is a wonderful destination. I think any destination would be suffering as a result of these taxes. Secondly, I really would go and point out to your local Department of Commerce, wherever that is, that this is a sales tax targeting activities that take place outside Germany. Now, there are some tax theorists who would disagree with me, but I'm pretty clear that VAT is already being paid on products enjoyed in Germany at a rate set by Germany on prices agreed by German suppliers. You found the right price to pay in Germany, that which is between those costs and that which you charge the customer is a margin which is enjoyed by the customer as a result of your selling it. And that is enjoyed in the origin market in the vast overwhelming cases, majority of cases. I think what they're trying to do is really unjust. Lastly, I'm afraid you've got to treat all 2023 programs that include Germany with a degree of caution. We just don't know what's happening, but it's possible, and according to the German tax authorities, it's likely, they say it's still saying it's going to happen, that there will be considerable compliance costs and financial costs as a result of doing business in that destination. You'll be pleased to know that's the end of the slideshow. We'll go back to David. David, what's your take on this at the moment? Is there anything you need to say?
Well, I would add one point. It goes back to Tom, to one of your first slides where you talked about what the position has been until now, which is basically that a third country, a non-EU tour operator, does not recover the input VAT on costs, but doesn't pay anything on their sales either. And just to explore how viable a position that is to maintain, even for Germany, we know that that has been the approach overwhelmingly adopted in practice. The question has always been whether that is a proper interpretation or not of EU law. And at the heart of this issue is the uncertainty in the meaning of EU law, which is just, I think, ambiguous on this point. In practice, member states have interpreted it to mean that a third country tour operator is outside the scope of EU VAT. They are within TOMS as such, but because they don't have a place of business in the EU, they have nowhere to pay the VAT. What Germany has done after 45 years or so of accepting that as the proper interpretation is to decide that it's not the correct interpretation anymore. And that they should turn around 180 degrees and say that a third country business is in fact outside of TOMS. And it's that conclusion, as Tom said at the start of his presentation, that renders the third country tour operators liable, at least according to German interpretations, to pay German VAT. Let's not lose sight of the fact that the majority of member states so far have not seen fit to change their interpretation and to follow the German position. So what I'm saying, and I would add that the meaning of EU law has never been tested at the European Court. But That may change in the next few years, but so far nothing. So what I'm saying in perhaps a rather roundabout way is that it is, to my mind, a perfectly reasonable argument to raise to say to Germany or any other member state going down this road, no, we don't accept that we have a liability. We think your interpretation is incorrect. Now, of course, there are risks associated with that. In German, tax official was to say, well, don't accept that. Your recourse, of course, would be through the German courts and conceivably eventually to the European court. I mention it merely to put this into context and to say we should not just blindly accept that what Germany is proposing to do is in fact correct. I would also mention, although it gets a lot less publicity or attention, that Croatia has done the same. I'm aware of a number of UK B2C tour operators who have now registered in Croatia. Theoretically, it's similar, at least, to Germany. We widely expected this time last year that Austria would go the same way. They didn't in the event. I think widely assumed to be because Germany decided to defer, so Austria did as well. But we may well find that Austria follows Germany in the near future, possibly with effect from the 1st of Jan 23, always assuming, of course, that Germany does go ahead. And more recently, and I would put both of these no more firmly than a rumour, but I have heard that both Cyprus and Portugal are considering implementation of something similar to German. I think without the complexity of the German distinction between reverse charges and the payment of VAT, but certainly an expectation that somebody selling, whether B2B or B2C, services enjoyed in Cyprus or Portugal might register. These are unconfirmed. There is, at least to my knowledge, nothing at all that you would in the public domain that you would base a decision to register in either of those countries, but it is rumoured that they are considering doing the same.
I think it's worth, just to add to that, the German tax authorities, when addressing the Bundestag, maintained that their model was being followed. Portugal they mentioned, they did not mention Cyprus. But they did say that it was being followed by both Finland and Greece. It's an extraordinary thing for them to say because we're obviously trying to get answers. And if anybody out there can get an answer from Portugal, Finland or Greece on this subject, I'd be very interested to hear it. None of them are confirming this is happening. And it's very strange because if it is happening, they need to know about it and we need to know about it. If it isn't happening, they need to stop the German tax authorities telling everyone that there are going to be huge liabilities incurred in dealing with Portugal, Greece and Finland. We will find out, I hope, within the next few weeks what on earth is going on that front. But as David said, that superficially from a tax point of view, it looks quite an appetizing prospect. You know, there's all this product out there being sold. According to normal VAT theory, or a VAT theory, the tax is payable, VAT is payable on all services enjoyed within the EU, and it's payable to the country where that service is being enjoyed, and it's payable on the price charged to the consumer. And there's no way in that thinking it says price charged to the consumer if within the EU, it's the price charged to the consumer, period. So from their point of view, they probably feel justified in pursuing this, that there's some tax that should be collected is leaking out of the system. We obviously disagree with that, but that will be their position. We have, I should have highlighted this earlier, there is a chat function on Zoom. We'll be delighted to take questions. We have a couple of questions cropping up here. The first one is very easy to answer, which is, can we have a copy of these slides, please? The answer is yes. This webinar is being recorded, and the webinar itself will be posted up both on YouTube and via our website on YouTube. And I will make sure that these slides are available independently if should anyone want them. The second question is slightly more interesting, which is a travel agent in the UK is selling a hotel in Germany. Should they register in Germany to do this sale? If they sell in the UK, do we need to charge any VAT? David, over to you.
Okay, well, firstly, let's deal with the term travel agent. I think it's clear that the need to pay the German VAT only exists where the travel agent or operator, call it what you want, is selling in its own name, selling as a principal, if you like. So if a travel agent is genuinely an agent, a disclosed agent for VAT purposes, then this obligation in Germany does not exist. But if we assume that the travel agent is more akin to tour operator, should we say, to use traditional terms, i.e. selling this German hotel as its own product, yes, they should register in Germany, provided it is a B2C sale. So if the UK travel agent is selling to a UK consumer accommodation in the German hotel, then that is a classic example of a situation which from next year, Germany would expect that UK travel agent to pay the German VAT. And the fact that they might be selling it in the UK to a UK consumer makes absolutely no difference. The determining factor here is two things. What is the nature of the supply? Well, in this example, it's hotel accommodation. And then secondly, where is the accommodation? If the accommodation is in Germany, that's when this liability kicks in.
Just to clarify, there's an interesting point you made there, but just to clarify, or the point you raised that I need to explore further, but just to clarify, so my understanding is, David, that when you say in your own name, effectively, even if you may not be packaging this as if it's Joe's travel agent, Joe's Wings travel agent of Northampton, and he's selling to a consumer. It doesn't have to be a branded product like that. What you're saying is that if he's buying a hotel at a net rate off a supplier and adding a margin to it and then selling it to the consumer, in that circumstance, the fact that he's adding a margin to it, that incurs the liability. If he's just receiving a commission from someone else, that's the responsibility of the person paying the commission.
But yes, very probably. It's really a matter in the first instance of looking at the contract, assuming there is a written contract, to see who has agreed to do what. So what is the what rights and obligations does the travel agent have? Basically, is he buying the accommodation from the hotel in order to resell it, or is he agreeing to sell the accommodation in the name of the hotel and on behalf of the hotel? That second model would often be described as disclosed agency. And in that latter situation, there should be none of this obligation in Germany that we're discussing. But in the first instance, so basically anything other than disclosed agency, you would be considered to be the supplier of the accommodation. The accommodation is in Germany, and therefore certainly if it's a B2C supply, the obligation to register and pay the German VAT exists. But if this travel agent business is actually selling in its own name as a principal, but on a wholesale basis to another tour operator, for example, then an ability to recover the German input VAT exists, but this is where the reverse charge kicks in, and the purchaser of the travel agent service would have the obligation to be registered to pay the VAT on the travel agent's sale. This is the bizarre aspect that we anticipate for Germany, and it's what makes it different when considering Croatian VAT, for example. So you might say, looking at the position of the travel agent in isolation, so not the wider distribution here, that the travel agent, if a wholesaler, would actually be in a better position because they will get input VAT recovery without any need to pay output VAT. But you are creating, or well, the travel agent's not creating, but you would need to recognize within the chain that the customer has an obligation to register and pay the reverse charge VAT. And really, when we talk about compliance, This is an awfully large part of it. Germany, to my opinion, never got this aspect right for many, many years. The wholesaler based anywhere in the world, including the EU, anywhere outside of Germany, was entitled to make a claim, but they were very, very poor at collecting the VAT from the other end of the transaction. And if they're not careful, they're going to find the same happening again.
Yeah, it's the opposite outcome for which they're hoping. We have another question. In fact, we have another 2 questions, which means that things are rolling on the chat. Keep them coming in, please. Someone who wishes to remain anonymous has posed a question. Anonymity is entirely understandable in the circumstances. Are we to assume the selling price will be apportioned by reference to the relative proportion of costs, with each attracting its own underlying VAT? That's the question. I think what they're meaning by that, are we to assume that the VAT on the selling price will be apportioned by reference to the relative proportion of costs?
Well, I think, Tom, it picks up your point about the respective different rates of the component parts of a package. So yes, when we're selling a package of 2 or more items, I think the questioner is absolutely right. So the standard way to do it, not necessarily the only way, but the way I've always seen it done in the past in Germany, is to take the cost of the component parts and to apportion the package selling price by those costs.
Yeah. So, you know, it's difficult to give an example, but I believe attractions charges, attract something like a 20% rate of VAT, is that correct? It's in that region. And but hotels attract a reduced rate of 9% VAT. And you'd have to balance, you'd have to work out what proportion of your product base consists of VAT at one rate, and then what proportion attracts VAT at another rate, and then you have to build your VAT calculation, output VAT calculation on that basis. I don't know whether I explained that right, but I tried to.
I think it was okay.
Okay.
The next question is: does the OTA, or does an OTA also have to adhere to this, as well as the travel agent buying from OTA? Yes, I mean this I suppose goes to the heart of the matter. Again, starting point is what is the contractual status, if you like, of the OTA and the travel agent. If they're both disclosed agents, then neither of them really should have an obligation in this area. But if they are both selling in their own name, then they both need to consider their position. Now, whoever might have the contract to purchase with the German hotel is the person who will have the entitlement to recover the German input VAT. The person who sells the final service to the consumer will have an obligation to pay the VAT on the final selling price. Anybody stuck between that first entity and the last is in this difficult position, and we really can't answer at the moment what obligations they have. We think, this is the point I was making before, we think technically they have an obligation to register and pay reverse charge VAT, so there's no cost as such associated with it, in most circumstances at least, but it's just a compliance burden, and a completely unnecessary one. But it does always, with VAT, depend on the individual circumstances.
I just want to emphasize, when you say selling in their own name, I mean, this is a well-tried phrase within VAT circles, but you're saying if they're effectively adding their own margin, if they're buying a product and adding their own margin to it, would that be another way of describing it?
Yeah, I mean, it's so difficult to generalize here. We could do a webinar solely on what these concepts mean, but
a good idea. We get them flocking me.
Indeed, I seem to think we have done. But anyway, yeah, look, somebody taking a net rate and applying a markup from a German perspective is very, very likely to be seen as selling in their own name.
Right.
Yeah.
Let's try and, where we can hit on a simplification, let's go for it. Now, you've got another question, David, it's to you. Marvellous. Is your wholesale example that would only apply to initial wholesaler, but I should rephrase the question. David, does your wholesale example only apply to an initial wholesaler buying from a German supplier? Not quite sure what I mean by that.
The opportunity to recover the input VAT can only apply to one person. It's got to be the first person, really, the person who's contracted with the hotel to buy the services, because he's the only person who's going to have a German VAT invoice. Does it apply after that? Well, it certainly applies to the person last in the chain making the B2C supply. But again, does it apply to any other intermediaries stuck between that initial purchaser and the final B2C supplier? I think it does, in theory at least. But I'm afraid, as we've said a few times now, this is one of the aspects, I think, that we desperately need clarification from the German tax authorities. I mean,
and then as I alluded to, we simply don't know. I mean, we're getting different noises. David's citing what is the standard practice, to a certain extent, standard practice is the way in which the reverse charge works. But I'm also hearing that they would adopt a mechanism familiar to people in other European countries where at every stage of the process, you reclaim your input tax and then you apply VAT to the output tax and transfer the balance of the two to the German tax authorities. This is what would normally occur in most jurisdictions, but we simply don't know at the moment. And this is one of the areas where we think they've really got to get it straight and clear before they implement this.
I did discuss that point 3 weeks ago, probably, with German advisor Volker Yorksik. Many of you know him. I know he does speak to the Berlin authorities, I think, on this and many other issues. And his view is technically it applies to everybody. Now, there may be a dispensation to change that by the start of next year, but we just don't know, I'm afraid.
By it applies to everybody, does it mean that everybody would have to register, but the obligation to pay the final VAT on the purchase price without any input recovery, well, without you doing, without that final company making input, without?
I think, to put some figures on it, I always think that helps. Let's say the initial purchase of the room is for 100 plus 7 euros of German VAT. So the initial purchaser, wholesale supplier, recovers the 7. The room then passes through various intermediaries, let's keep it simple, all acting as a principal, selling in their own name. They all add a little bit of value, they mark up by a small amount. They all make their own separate declarations, but there's no tax liability as such associated with each of those intermediaries. It then reaches the final B2C supplier, by which time the price has become 125 or something like that. The VAT payable would be the 7% VAT due on 125. So if you looked at everybody's declarations in aggregate, the German authorities would have collected the right amount of VAT in an extremely difficult and complex manner. But if everybody did what they were supposed to do and did it properly, the amount of German VAT collected would be correct. But there must be far simpler ways of getting to this.
Okay. We have not a question, but a statement. It's something we are not unfamiliar with. It's simply saying, greetings from Berlin. Thank you for your presentation. We're very aware of this issue and work onwards to avoid this regulation and to convince the Ministry of Finance that this will be a damage to destination Germany. Best regards from the Federal Association of the German DMCs, who I imagine have got a problem if they are selling any products outside the EU. David, is there anything else we need to consider? Is there anything happening
on... we've still got more questions, I think.
Oh, we've got another question. Sorry.
So we have a question: if the distribution office is in the US and sells to American customers who come to Europe, but the operator is based in Europe, does the American distributor still have to register in Germany and pay VAT on the sales? Well, again, I'm afraid the answer is really, it depends on the circumstances, and in particular, what is the status of the distribution office? So is the distribution office operated by a separate US corporation? Is it selling the European, the German holiday in its own name? In that situation, the answer is yes. I think it should register in Germany. That's what Germany would expect. The fact that it is purchasing the service from Europe does not protect that US corporation from that requirement. It may well make the situation difficult because the European tour operator, whether in Germany or not, is quite likely to be accounting for VAT under their local version of TOMS, which means that the distributor would not have a VAT invoice. So this was one of the distortions or double taxation areas that Tom was referring to. So in that situation, the distributor would still pay German VAT on the full selling price, but would not have any entitlement to offset any German input VAT against his liability. The tour operator, assuming it's in a member state, would be at a competitive disadvantage. A better result for the distributor in that situation would be to purchase the service not from an EU-based tour operator, but from a UK or Swiss or indeed another American tour operator who would have the opportunity to be very much more efficient from a VAT perspective. But if the distributor is an agent of the tour operator, then the tour operator will pay the VAT in the EU via TOMS, again, assuming the tour operator is not just in Europe, but is in the EU, and the distributor itself would have no obligation. So I'm afraid the answer again depends on what is the status of the distributor and what is its relationship with the other parties.
And the short answer is there's no easy way around it, I think is the short answer. There are major pitfalls, but the tightrope which you have to conduct, there's no way of escaping this tightrope walk. There's just lots of mistakes you can make whilst performing that tightrope walk. One of them would be to use a EU-based wholesaler, for example. And there are many possible ways. The big problem we've got with this scheme, to be entirely frank with you, is as David has implied, is that there is massive scope for evasion, which we're not in favour of at all. But it's, as I was implying in my presentation, people, if you apply tax, people have got to be really confident that this is being applied uniformly everywhere. And I can see no way they can give an assurance that this is going to be applied uniformly everywhere, because their remit does not run everywhere. And this is going to be a major issue. Sorry.
Another question about how you can avoid all of this nightmare. The suggestion that you might run your business through an EU establishment. Yes, absolutely correct. If your place of sale is within an EU member state, you would apply the local TOMS. The German interpretation does not apply to you. So you'd have no obligations in Germany whatsoever. You would pay margin VAT in the member state in which you have chosen to be established.
But don't forget, sorry, excuse me, David, the financial liabilities of margin VAT are not small. It's not an easy escape.
No, but it hasn't really happened because member states have not, for the most part, followed the German lead on this yet. But certainly in the early days after Brexit, I did have a number of conversations with UK tour operators who were considering doing precisely that as a means of simplifying their obligations.
Mm-hmm. All right, sorry. And if no margin is applied to the German hotel, does this still come into effect?
Yes. Yes.
Okay. You just not, you just don't pay. You have to claim it, so you have to file a return.
Well,
but you don't.
Well, if you're the final B2C supplier and you're selling at cost, it's an unusual situation, I guess. But yes, in principle, it still applies. So if there was no distribution chain, just one party involved, and you bought at €100 and sold at €100, then I think in principle, yes, it does apply to you. You should be registered in Germany, you recover input VAT, you charge output VAT, the two would equal each other. But as a general principle, the fact that you don't have any liability, net liability, doesn't absolve you of the need to be registered.
No, and there's no availability of a transport company scheme in such areas if you're packaging.
No, absolutely not. No, that's a specific UK invention.
A lot of things that are invented in the UK no longer work. Anyway, I think, David, we are actually out of questions, but we'll welcome some more. Is there anything else happening on the indirect taxation front and travel?
Well, very quickly, and you alluded to this in your presentation, but what we're talking about here may just be a relatively short-term problem. There is a consultation going on. Well, consultation is finished, but some economic consultants are doing some work for the Commission with a view to having some TOMS proposals probably next year. So we may have new legislation in place by 25, conceivably, maybe 26. Which would probably tackle this issue head on. So the uncertainty would disappear, and we would hope would do it in a way that is actually much more user friendly than everything we've just discussed about Germany. So this problem could be a relatively short term problem, but it's going to be there next year unless Germany has another think on this. And the other point to mention, which is linked to this, I know some of you have been following developments in this area, but again, the European Commission has been considering how platforms selling accommodation and transport in particular online might be obliged to account for VAT, which is not collected at the moment. And this would apply to platforms no matter where they are in the world, provided the accommodation or transport takes place somewhere within the EU, and broadly speaking, is not otherwise being taxed by the provider of the service itself, for example. It's just a matter of a week or so ago, I think, the consultant's study on this was published. No surprises in the study that I can see in particular. It still seems very likely that the favoured position will be so that the platform would be deemed to sell the service of the registered provider. So a villa rental company, for example, selling online could find itself affected by this in any situation where the owner of the villa is not VAT registered. So we expect legislation on that later on this.
Okay, David, you're breaking up, I fear. I just reiterate, correct me if I'm wrong. This platform report, which looks at distribution of tourist services, which involve the distribution of EU product, is really trying to create a level playing field. It's always a disaster when the regulators start trying to create a level playing field. They get a vast digger out and create absolute mayhem everywhere, trying to create a level playing field. But in their attempt, what they're worried about is that we have services being distributed online which are taxed and attracting VAT, such as hotel space, such as hotel rooms, being distributed at the same time as product, particularly individuals' private rooms or small resort villas, which are so small they don't attract VAT. And they feel very strongly that this is an injustice. You've got product being sold with VAT against product which doesn't attract VAT, and they want to iron that out. And they're looking at a set of proposals which will seek to do exactly that. I think this is something which is sufficiently important that we ought to be looking at it again, and we will look at it again because it's pressing but not urgent. There's nothing like as pressing as the German VAT question, and it actually probably affects a slightly different group of people. So we will look at this again after August, I think. But I think we're now over time, so it's really down to me to thank all of you who are attending. Particularly thank you to those who posed some very pertinent questions. And above all, thank you to David, who's joined me for this, this presentation. And it will be available on the website in due course. And with that, I want to thank you all. Thank you, David. Goodbye.
Thank you.